Hello traders. Welcome to today's Pairs of the Day update. Let's take a look at the latest movements and key factors affecting the Euro, US dollar, USD, and Canadian dollar, CAD. The Euro is trading stronger against the US dollar, with the Euro to US dollar pair hovering near 1.1080, recovering from a two-day losing streak in Friday's early Asian session. However, traders are treading cautiously ahead of critical economic data releases, such as German July retail sales and the US Personal Consumption Expenditure Price Index. These reports could determine the next move for the euro. Recent data from Germany and Spain indicate that inflation is cooling, which adds weight to the argument for a potential rate cut by the European Central Bank in September. While this could provide some relief to consumers, it also places downward pressure on the euro, making it less attractive to investors in the near term. The U.S. economy grew at an annual rate of 3% in the second quarter, surpassing expectations and the initial estimate of 2.8%. This stronger growth diminishes the chances of a larger rate cut by the Federal Reserve in September, lending some support to the U.S. dollar as market participants digest the news. Following the robust GDP report, the likelihood of a 50 basis point rate cut by the Federal Reserve has decreased. Markets now see a 66% probability of a smaller 25 basis point cut in September. Traders are also closely watching upcoming data, such as the US PCE price index, which could offer more clues on the Fed's next steps. The US dollar to Canadian dollar pair is trading with mild gains around 1.3490, supported by better than expected US economic growth. However, the upside might be limited, as higher crude oil prices could lend strength to the Canadian dollar, given Canada's significant role as a leading oil exporter to the US. While rising crude oil prices may support the Canadian dollar, expectations of another rate cut by the Bank of Canada are building. With ongoing economic weakness and rising unemployment, the Bank of Canada is anticipated to lower rates for a third consecutive time, which could weigh on the loonie moving forward. Now, let's move on to the technical analysis and check out the charts. We have opened the 4-hour chart of Euro to US dollar. The price is currently moving below the 20-period moving average. The stochastic indicator is attempting to cross higher near the oversold area, suggesting a potential continuation lower. For support and resistance levels, we have identified 1.1026 and 1.0958 as support, with resistance levels at 1.1139 and 1.1201. If the price continues to move lower, it may find support around 1.1026 and potentially extend down to 1.0958. On the upside, resistance could be encountered near 1.1139 or potentially extend towards 1.1201. Now, let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is currently moving around the 20-period moving average. The stochastic indicator is moving higher toward the overbought area, suggesting a potential upward movement. For support and resistance levels, we have identified 1.3432 and 1.3366 as support, with resistance levels at 1.3549 and 1.3615. If the price moves higher, it may encounter resistance near 1.3549 or potentially extend towards 1.3615. On the downside, any declines could find support around 1.3432 or potentially extend down to 1.3366. Always remember to consider your risk management strategy before entering any trades. That's it for today's update. See you in the next video.